Good morning, and welcome to I believe the fourth video of this series where we try to make ends meet. A quick reminder, we have about 8 days for the month to end, and that is when the series will be completed. If you haven't already joined the Telegram group, please do, because the link will be in the description below. That's where we would get to discuss anything that you may have, any questions you may have, and also where I'll be trading my own personal live account. Obviously, as I said, this will be at the end of the month when I'm done teaching. Of course, there will be extensions if I need to cover anything or if I need to clarify anything, but most of my actual trading and documentation will happen in the group. As I said, the point of this series is to make ends meet and not to buy that Lamborghini or something. But yeah, let's begin. In this video, I'll be covering respecting and disrespecting. In the previous video, or the previous videos, we pointed out a few things. We've learnt about old highs and old lows. Let's use a proper tool for this. We've pointed out old highs and old lows. We've also pointed out gaps. I'm just going to use a rectangle tool because this can be a liquidity void, a volume imbalance, but most likely going to be a fair value gap. I'm mostly going to be working with fair value gaps. So we have these two things that we have covered in the previous video or videos, and I wanted to teach what it means to be respected or disrespected. Let's start off with the swing highs and lows. If a candle closes above a previous candle, so remember the time I said that we would like to see a candle closure above its previous swing high for us to consider it to be a market structure shift and then a continuation to the upside. That's basically what I'm talking about in this video. So here we have a closure above this swing high, right? There's a candle here that actually closed above the previous high that was at that point. Let's just do something like this. I know this is a rough schematic of a candle and it's not even the same color, but I was basically trying to illustrate that if a candle closes above a previous high, we are likely to support higher prices. I'm not saying this is set to stone or anything, but this is going to help us. It's going to help make you understand a few concepts and a few ideas that I will be covering in the future when the month ends. The same happens in the opposite direction. If we close below an old low, we may consider that to be a market structure shift to the downside. The same happens with an individual candle. If we have a candle printing here and the next candle closes above that high, we're likely going to continue higher, right? But if a candle does not close above that high, it may just be a rejection at the highs and then a continuation to the downside. So this same concept applies to swing highs and swing lows, old highs and old lows, and individual candles, because price is fractal, as we've already covered in the previous videos. The same happens, or the same applies with fair value gaps. Say, for example, we create a bullish fair value gap at somewhere at this point, right? We have a fair value gap here, a BC. If you remember from the previous video, if you haven't, please check that one out before continuing on this one. Let's say we have a bullish fair value gap. For us to consider this to be a bullish fair value gap and continue higher, obviously we would like to see the bodies of the candle remain within this fair value gap for us to continue higher. But if we see price displacing lower and completely disregarding the BC, the fair value gap, in other words, if price trades higher, closes above the BC, and now we expect it to be used as support for higher prices, but it doesn't do that. It rather closes above the high, above the fair value gap, creates a BC, and then displaces lower to close below the fair value gap. Now, this is when a fair value gap has been disrespected and can be used as an inversion fair value gap. So the same idea as swing highs and swing lows. When price disrespects the high, we could use that to support higher prices. But if price does not close above a swing high, that could just be a turtle soup. It could be a liquidity sweep. It could be price quickly running the highs to trade lower, right? That's a possibility. So closures means continuation. Lack of closures means a possible reversal. So it's just a quick thing to keep in mind, something to note. And obviously I'm going to show this on the charts. This video will hopefully be shorter because I just want to cover disrespecting and respecting of old highs and old lows. Let's jump straight to the GBP USD chart from the daily perspective and go back a few candles or a few days. So at this point, let's I will incorporate both of them, swing highs and swing lows, as well as fair value gaps in this example. So at this point, we have price printing, creating a swing low there and continuing higher, right? We are probably going to come to this swing high, but if I was to ask now, what could possibly stop us from getting to that swing high? I would like to think that many of you would mention this fair value gap, because this is a bearish fair value gap. This is a CB, and this is supposed to support lower prices. So this is supposed to displace and come to this swing low. But what happens if price disrespects it? What happens if price trades above it and closes above it? Well, let's see. The next candle print, and we actually closed above it. At this point, we could consider this now to be an inversion fair value gap. So it moves from being a CB, because I have my template here. I would normally label this as a CB or a bearish fair value gap or a sell side imbalance by side inefficiency, to now becoming an inversion fair value gap. I labeled mine as IFVG. So we have this as an inversion now. So if price ever comes down to it, we are likely going to use it as a trampoline or a springboard to push up to the buy side liquidity that we have up there. So let's see how price prints out, and we can see price printed out. Remember the open, high, low, close. We opened up there. We traded as low as where? As the fair value gap, the one that was disrespected. And now we're pushing higher, where we're likely going to go to that buy side liquidity. I'm not saying that's the case, but it's a way that I use to read price. And let's see how price prints. And exactly the next candle, we actually close above. We actually sweep that high, that buy side liquidity that we were looking at that point. Now, a concept of swing highs and swing lows. Now that we've displaced above a high, right? Why could we not consider it to be a market structure shift right here when price came and traded above this high? You can see price opened up here, traded so far up into this area. Why did we not consider this a market structure shift to the upside? Well, simply because we did not close above this previous swing high. A candle did not close above it, so in other words, we were rejecting this high. And notice the second candle came, we tried it one more time, and failed to close above this high, trading lower now. So this was an indication that price was rejecting the highs and is probably too weak to close above to continue higher. So in this case now, right here, price has now closed above a previous swing high. What is that likely going to indicate? Well, possibly higher prices. And now, as price has printed, we actually now created a fair value gap. So we are possibly going to take this as our springboard to continue higher, possibly again to this buy side liquidity up there. These are all likelihoods. Nothing is set to stone in the markets, and we just use the probability to gauge how price is going to move next. I'm going to cover these things, and I'm going to try and walk with you as much as possible during the times I'll actually be trading to make my ends meet at the end of the month, as when the series ends. So now price is printing. I wanted us to note something else here while price is consolidating. Note how we have a previous high. At this high, this daily high right here, this candle's high, we can see this candle closed above it, which is probably indicative of higher prices, right? Because remember, when we close above a previous high, we are probably going to continue higher. If we close above a CB in this case, we're probably going to continue higher. So we're now closing above this previous swing high, previous high, not swing high, when we're likely going to continue higher. But look what happened in the next few candles. Over here, price could not close above this high. Over here, price could not close above this high. And even today in the current daily candle, price is actually failing, showing us aggressively that it's still not able to close above this high. So this might be indicative that price is likely going to come back into this fair value gap. Remember the springboard that we were looking at that could possibly take us higher. So this is one of the two things that I was trying to teach in my first two main videos, which is price only goes to two things. Number one, liquidity. In this case, we had buy side liquidity, buy side liquidity, buy side liquidity, right? And these are important liquidity levels because these were daily highs. These were previous daily highs. So price goes to the first thing being liquidity. The second thing price goes to is inefficiencies. And I already covered that inefficiencies are gaps, right? In this case, we have a buy side imbalance, sell side inefficiency, or a bullish fair value gap. So now that price has gone to liquidity, taking liquidity up there, we're likely going to come back here. So we're probably going to get something that looks like this, a rejection of the highs because we kept failing to close above a previous high, then possibly from this inefficiency back again to a liquidity level, because at that point this high would now become a swing high. Going through that, of course, we have that high over there. So we could get something like this after liquidity has been taken in inefficiency, because this was not efficient. This gap on the daily chart is not efficient in price. So we might offer some level of fair value, then from fair value back again to the premium, or back to external range liquidity, if you want to call it that. So that's all I have to cover in this video, keeping in mind how candles close, how they open, how they displays away from liquidity to inefficiencies and inefficiencies to liquidity. I know there is so much that was covered in this video, especially if you're a newbie, but I hope in watching it in repetition and the video not being too long, and of course reaching out to me on the Telegram group in the description, you will be able to understand what I mean by closures and failure to close. A quick example while I'm looking at this is right here. We failed to close below this low right here. You might have been asking yourself, are we sure that this inversion fair value gap was going to hold for higher prices? Well, look at how we failed to close below the previous daily low. So this could be an indication when price came and failed to close below it. This was probably an indication for higher prices. So yes, I know that I'm mixing so much from swing lows to previous candles and fair value gaps, but those are the three things, and I promise you those are the three things that I will be covering throughout the entirety of this series and in my personal trading. So if you can grasp this concept, I don't think you would need anything else to make your ends meet. For now, stay safe, good luck, and good studying.